Venture capital flow. What's new for crypto, blockchain, and Web3?
Okay, my name is Gustavo Montero. I'm the chairman of 𝐶𝐴𝐻 Capital. 𝐶𝐴𝐻 Capital is an asset manager managing below $100 million worth of assets for clients, investing in digital assets. That's what we do. Now, this panel is about venture capital and what's new. A lot is new since Friday. A lot. So we have as my my co-panel members, as we call it, Alexander Fazel, CPO from Swissborg, and Vineet Budki, CEO and managing partner at Cypher. Perhaps, Vineet, I'll start by asking you to introduce yourself briefly to the public.
Guys, this is Vineet. I run Cypher Capital, which is one of the funds run out of Dubai. We've done close to 200 plus investments, $100 million single LP fund. Our investments include something like Sui blockchain. We are the only investor in this region and continuously investing still. I think 14 new investments are being looked right now to finalize it up. And good friend of Alex, who is going to give, you're giving an airdrop to people who are going to be on the seat, right? Because, you know, there's no one on the seat. He's giving an airdrop, guys, so you need to be on the seat.
All right, so, Alex, you go.
AIBC Habibi, salam alaikum. Everyone's like, hey, there's like 7 people. Good to have you all. My name is Alex Fazel. I'm the CPO at Swissborg. We're a company, one of the ICOs of 2017, based in Lausanne, Switzerland, that started off with 5 people and now managed to survive, but also scale to 238 employees as of today. So, but more importantly, we're serving a community of more than 700,000 KYC users in Europe, and we're one of the big crypto apps. Look forward to being with you guys today. Woo!
Thank you very much. So, listen, I had a whole bunch of very nice questions for these guys, but everything changed on Friday, as you all know. So I think, in the interest of clarity, transparency, we're going to talk about what happened on Friday in the US, in California, and going into it because that has a direct impact into VCs, Web3, etc. So I'd like to ask Alex first, what do you think what happened Friday to the Silicon Valley Bank?
Both CeFi and DeFi guys blew up in the span of 3 days. Euler Finance, $200 million was exploited. Signature Bank, which was also a case of SVP. But I want to share this with you guys with a simple story. Once upon a time, there was a grandfather. He was 168 years old. He was a wise man, but he's made many, many mistakes. And his name was Mr. TradFi. And he had a little toddler who was 7 to 8 years old in the same village, and his name was DeFi Jr. And the problem across both of these worlds is that even though the grandpa had lots of experience and wisdom and a track record, he made many mistakes, and his entire family almost lost all their capital multiple times. So what happened? DeFi Jr. didn't trust grandpa. He's like, not only he's a baby boomer, but I'm cooler than him, and I'm not going to learn from him. And what's happening today is that we're not combining both worlds. DeFi Jr. doesn't respect TradFi, Mr., and they're not working with each other. Because one thing that we can learn from traditional finance, although in this case it was a disaster, there is a track record, there's some risk assessment, there's some risk mitigation procedures that we need to learn for DeFi Jr., who just in the span of 2 months lost $500 million because he's a toddler, he's breaking things, but he's making cooler stuff than his grandpa. And I think what's the one point that we can learn from SVP guys is when you create a bank account, understand that it is worse than opening an account with Celsius. Why is it worse? Because just as a depositor, you sign 50 pages that you're never going to read, and that allows the bank to do whatever the fuck they want with your funds. While in crypto, as a custodian, you can actually deposit your assets without them being able to touch it. And then if you have the right license to supervise the company, make sure they always segregate the assets, it's different as well. So I think one of the biggest mistakes is taking people's assets, investing them into MBS, mortgage-backed securities, and being absolutely irresponsible.
Vineet, your opinion.
I have a very different opinion on this. Actually, I post some of my forecasts always on Twitter. And in August, I had posted one where I had clearly shown 16K in December. And exactly a month back when we were at 25K, it's pinned on my Twitter. I said it's going to 19,800, some shit like that. See, point is, these banks going down, somewhere there's a nuclear war happening. That's been happening all around. Are we investing for the next 3 months? Or are we investing for the next 10 years? Do you still believe that Bitcoin is an asset that people are accepting more and more? Is it better than a fiat currency like in Argentina where 95% of the peso has depreciated? If you're investing, because we talk as a speculator and position as an investor. Guys, it's a $25,000 Bitcoin. You really know that it's only 21 million. So for me, personally, yes, fundamentals definitely show the direction of the market, but something that has intrinsic value cannot go down. So yes, the banks have gone down. Yes, there might be contagion even, but this is a new asset class which is growing. More and more people are getting on board. I don't think for long-term investors, they should even bother about it. Just keep building. Just keep getting on the chain. So that's my opinion.
No,
it's a very different
I love
one.
it. I love different opinions on this. So let's go a bit deeper into this. A lot of VC companies, and I suppose your case, and crypto companies have their money in banks. Now, it happened to be that before being a banker myself, I was trained by Pricewaterhouse, and I worked as an auditor for a number of years. My specialty was balance sheets of banks. A very highly interesting topic today. Over the weekend, I got in excess of 20 clients, and I don't do that no longer. I manage crypto assets, asking me to look at the balance sheets of banks where they have their money. So my question to these two gentlemen here is, are you going to look into the balance sheet of the banks where you have your money on Monday morning? Well, it's already, what, Tuesday? Tomorrow morning.
So guys, in order to build Trust 2.0, let's take Grandpa TradFi, right, and DeFi Junior. And I learned this thanks to this gentleman here. So number one, the audits, right? They don't mean anything. Madoff was audited how many times? 4 times in the same year?
Absolutely.
And I can tell you one thing, guys. I worked with some big corporations, and audits are supposed to be random, right? They just go in, walk in, and just say, open up your books, let's see what you have. But a lot of the big corporations actually know ahead of time, even months ahead of time, when the auditors will come. And for those reasons, they can cook the books, they can flip the books, they can do whatever the hell they want with the books, right? To make sure that it looks good in front of the public, their LPs and investors, right? So the audit is not enough. Now, what can we do? We could put that audit on chain still, right? So we can have your P&L, balance sheet. That has to be stamped on chain. But then on top of that, if we can use proof of liability stamped on chain, proof of reserve stamped on chain, then guys, that is real Trust 2.0, which is trustless. Because you don't need to trust anymore. All you need to do is verify. And as we say in blockchain, don't trust. Don't trust. Does anyone know? One guy's like, verify. Cool, thank you.
Vineet.
So, guys, for us, we have been spreading out how we have our reserves. Yes, we have saver banks, and yes, we have bitcoins. So for us, it's not that we are concentrated. Luckily, I come from a business where we don't do 20% a year models. So we were not affected by Anchor protocol. We were not affected by FTX, and our money is spread out. For me, when the whole world is talking that the world's going down, one of my projects just announced a $10.5 million round led by Pantera. 2 have done 10.3 million. One is going at a 400 million valuation. So again, it's, I've been hearing these people where they say, oh, I lost all my money in FTX. Who the hell keeps all his money in a single location? Haven't we learned risk? Because everyone wants to do multiples, but no one understands risk management. Yes, you can look at these balance sheets, but why do you really need to do it? Just spread out your risk, be in different asset classes. If you believe USDT is going to crash, be in USDT, be in USDC, multiple assets, so that you don't really get affected. And if all of them collapse, I'm really sorry, your luck is bad. Find a new business. Because when I was doing these investments, I clearly told the team that when BTC was 15,000, let's spread out into BTC. And everyone was like, what happens if BTC goes down? If BTC goes down to 0, this industry is closed. So I'm sorry, we can't do nothing about it. But if BTC has value, which we all see, then this thing will really go back up. So diversify your risk. Not too much time to keep on analyzing everything in the world.
Vineet is speaking right. How many people here have bank accounts today? Can you raise your hands? All right, okay. So the thing is that I know right now that there is in excess of 10 banks that could go belly up within the next 60 days, more or less. Which brings us to a topic related to our thing. We're speaking a little bit about traditional finance, but it's impacting us. What about on-chain banks? Vineet, can you give us your view of on-chain banks?
So for us, normally if we have to do DeFi, I don't do DeFi as I said, we would try to go with the Aave and compounds of the world rather than centralized agencies, because in the end they have the decision to lend and borrow, while in DeFi it's still generated by demand and supply. The only risk is, yes, anything can get hacked, but this is where we are evolutionary, Currently less than 3% of the world population is in crypto, and we are just building this technology. 10 years later, this will be more stable. But we are early. There's risk involved, but that's where the whole spreading of risk counts into place. For me, with banks, Emirates NBD closed my bank account 2.5 years back or so. I really didn't care. I was like, yeah, it doesn't matter. You can do an OTC in 5 minutes. I bought one of the first houses in Dubai has been bought on BTC, has been bought by me. So for me, I really don't care about banks going down. We are the crypto guys. We believe in being on-chain.
No, I love that answer. It's very good. Your view on on-chain banks, Alex?
Yeah, so for me as well, it's hard to trust banks, especially when your parents are from Iran, right? So I have a bad experience, essentially. But I do think there's one thing that's really important, guys. I think that the bank of tomorrow is going to be two things: on-chain first and community first. And what I mean by this is the whole corporate world. Who's wearing a suit today? No one's wearing a suit besides this handsome young man. But he's the beautiful bridge between generations, right? He's the guy who understands DeFi, and he still understands TradFi. But I think where we need to go, guys, is this corporate BS. We need to break it down. The companies need to be open, from the investment to the governance to product development to using the platform. Everything should be open. Everything should be on-chain. Everything should be open source so that people can really create a relationship of trust on a trustless protocol. I don't think the whole corporate stuff of you crossing your arms, looking sideways, and pretending you're cool is going to work with the new generations. As a matter of fact, our lower generation, our Gen Zs and Gen Ys, they don't give a rat's butt about Warren Buffett. They're going to go look at their favorite YouTuber and Instagrammer, and that's their new financial advisor. Why? Because they know that they want to follow someone every single day and feel like they know them. So the relationship is changing between the financial advisors of tomorrow. The relationship is changing between the traditional banks and what DeFi is doing with on-chain finance. So I think, this is a generational thing that even I don't fully understand yet.
We're all trying to understand. Even myself, I've been for 40 years in traditional banking, and I moved to digital assets about 10 years ago. So I'm still trying to understand it, by the way. But anyway, it's another subject that I think is interesting for us to discuss, which I think is going to have a direct impact in our business. Did anybody here watch the speech by Joe Biden last night or yesterday afternoon? Did anybody here watch it? He said essentially, I'm paying for any client in the California bank, and he says a no taxpayer will pay 1 cent, which brings you to the following question: where's the money coming from? $200 billion. That's the number, by the way. Obviously, it's a printing machine, which is going to have a direct impact in the value of our assets going forward. So can you have a word on that, Vineet?
So for me, if you look at the news that has been coming out in the morning, they say that because the interest rates have been going high and the assets have been eroding, banks are on a risk. I think this is a quick fix measure. Suddenly the economy will be flush with cash, markets will be going up, and it actually correlates to the 4-year Bitcoin cycle as well. Last year, January, I clearly posted, love your USDT, forget everything. This year, I said, let's get back on risky assets. We did close, in this whole down period, we did close to 60 million of investments. No, people were like, are you guys crazy? But what I think is that this is a quick fix measure. And the teams at Cypher have been told to sell everything by 2025 and run away. Because when you try to sort something with a quick fix measure, it comes back really bad.
Absolutely.
And this is a major, and this election years coming across is all going to make it a massive problem. So rather than doing that, you have to let the markets decide how.
100% with you. Any closing remarks, Alex? We have only a few seconds.
So I was just going to say, like, I think governance, and please tell me if I'm wrong, guys. I believe governance should be on-chain for the governments as well. Because I do not think that taxes are necessarily bad. I do think that unrealized capital gains tax is a fucking scam. Because, you know, you're not protected for the downside. Why would you take money when you're not cashing out? That's a scam. And most of the banks are Ponzi schemes. But I do believe that what if the governments, they all applied the governance on-chain? Would you be bothered to pay taxes when you know exactly where the funds are going, where you know it's building roads for a specific town, when you know it's building schools for your youth, where you know it's changing the system? Then all of a sudden you're thinking to yourself, okay, I don't mind paying these taxes because I know it's going to help society. I know it's building a better future for the youth and the seeds. So that's my thing to it. We need to do on-chain governance. The governments and the regulators need to go on-chain. They need to start their ledger and start using decentralized governance to rebuild trust.
Thank you very much, Vineet.
Thank you, guys.
Thank you very much. So, guys, just a message for you. We are scrutinizing a very large number of banks ourselves right now because of our clients. Do not hesitate to come and ask me if you want to understand what it is. We're really looking at balance sheets of banks, and we've identified a number of banks that are going to go belly up within the next 2-3 months, or they're going to be bailed out by governments, not only in the US, by the way. Watch out for your bank accounts, be serious about it, and go and ask your banker a million questions. You have the right. It's your money inside the bank. Thank you very much.
Thank you.
67 years young, guys, 67 years young. This is the perfect example of a flexible mindset.